July, yay! This is a brand new month today in the mid of the week, but it's a brand new month. So what do we expect from the financial market? All right, this is going to be very interesting. Okay, once again, let me just turn on my recording. Let's go. All right, good morning to all of you. Once again, today is the 1st of July, 2021. And indeed, right, what do we expect from the financial market? All right, so of course, let's start off this moment right now. Let's everybody just do this. If you can, of course, if you're driving, please don't do that. There are about 27 of you, good number. Okay, let's start. How many of you are bullish for the month of July? How many of you are bearish for the month of July? Please key your answer right now into the group chat, shall we? Tell me guys, what do you think? Are you bullish or are you bearish into the month of July? Now today is the 1st of July, so that's a great question to ask. Let me just do a consensus today. How many of you are bullish? How many of you are bearish into the month of July? Please key your answer right now in the Zoom group chat. Okay, I'll wait for your answer. Okay. All right, we have Colin, ATM bullish. What's ATM at the moment? Oh, okay. Okay, at the moment bullish. Fred bearish, Jason bullish, Gary bearish. So it's 2-all now. All right, how about the rest? I have 31 of you guys online right now, so let's just continue and see here. All right, waiting for your answers. All right, only got 4 at the moment. How about the rest? All right, but those who are online, do give me a like button and give me all the little. Okay, Janet says she's bearish, so we have 3-2 now. How about the rest? All right, it's okay. Earnings this month. Okay, yeah, indeed. So okay, so mean what? Okay, Hoseng is bullish. Okay, so Johnny is also bullish. Anthony, bullish going bearish. Oh, okay, all right. Okay, so basically, it's still quite evenly tied between all of you. Okay, Toming and Justin has been bullish. Okay, so my point is this morning, I'd like to inform you that I will use the word cautious. Okay, cautious, right? Because there are reasons instead of statistics. Now, you know, guys, I follow statistics and I like probability. So, of course, the thing is that you must understand there's a rational reason why the S&P 500 now is up so many days. I'll show you the statistics and you'll be blown away. But the question is this: if you believe in statistics and the question comes in, would you believe that July month you have to be cautious? All right. So allow me to explain to you all this. All right. Because last month, during I think the 1 week before this month, we talked about the statistics for June and July. And apparently I did mention that usually July month is going to be positive, but that is on one point that June month has some correctional move. But the problem is June month, we do not see that. We do not see the correctional move that is supposed to come in. And because of that, now the so-called bullishness in July will be hit a dampener. And of course, this is not the one observation that I'm saying right now. It's actually even observed by Goldman Sachs. So that's why I'd like you guys to take a look. Okay, so today we're going to have a pretty interesting MAO. All right, let's begin. All right, my main thing is this. All right, so you can see the behind picture that I chosen. This is actually what happened back then in 1929. Okay, September 1929. All right. Okay, so let's take a look. Now, before we start this morning, once again, disclaimer as usual, because today got so much information shared with you. Some of them may be a little bit, towards one side. It could be very bullish, I can be very bearish. So that's the reason why I need you guys to, give me the full consideration that you have accepted the disclaimer and identified me. All right, thank you very much. Okay, I see that Michael is bullish and Eric is cautiously bullish. Okay. All right, now, this is a very good cartoon and I like it very much. No need data, no data needed. Okay, so you can see that currently now we are quite amazed by the way the stock market is moving. Now we are trained to look at fundamentals, basics, and understanding. But of course, anyone who comes into the market last 3 years will be totally lost because whatever you learn in school is no longer applicable. All right, so hear no data, see no data, do no math. Okay, so that is just trust your gut. And then fairly, if you trust your gut instinct, the last 6 months, the last 12 months, if you've been buying, you are making money. All right, that is a point that we're trying to express here. But the point is this, we're talking about 13 years, okay, or 12 years to be precise. All right, 12 years of bull and the market is still roaring. Now, normally, we should have a bull market cycle for about 5 years to 7 years. But apparently now we are stretching to the 13-year. And the question is 13 going to be a lucky number? So that is where the question mark all lies in. Okay. So this is a very cute cartoon, and I think that it's very clearly tell you that the current situation right now we are having. Okay, so that's the reason why we say that follow the chart, don't follow anything else, because if you follow anything else, prediction, forecast, and fundamental, it doesn't seem to work anymore in this current situation. All right. Now, of course, we always say this time is your friend. Okay, not trend, it's time. Because as long as you wait for your time, you bid for your time, you'll be able to enter the market. All right, just like yesterday when we shorted the Dow Jones, we made money, right? But once it hit a certain technical level, we must buy back. We have to buy back. If not, you will give back all your gains and you come losses. All right, that's very important. Now, impulse is always your enemy. If you don't do it, you do it after things have happened, then you think that everybody making money, you feel like you're missing out, and then you jump in, and that's usually get caught, right? So the thing is this, always be patient, take your time, and don't give in to your impulses, all right? I think this one, we can all agree on this, okay? So before we go into the main of the MAO, let's look at the market right now. It seems that we have some bullishness in the market. Okay, so now we have the China A50, it is trading higher right now, so likely Hong Kong will also be doing the same thing this morning. And of course, Hong Kong was down yesterday, it's down, but today I expect to gap up to about 28,850 level. So we're going to see Hong Kong opening up pretty soon. So stand by, traders. Okay, you want to get involved in this market in a short term right now. We are now a few seconds away. Let's take a look. Okay, Hong Kong has just opened. Wait a minute. Oh. Okay, I think it's some problem. Is Hong Kong down today? Wait a minute. Okay, is Hong Kong closed today? Oh yeah, Hong Kong is closed for holiday. Yes, correct. I remember. Oh, okay. I thought it was open. Okay, I saw my handphone wrongly. Oh, okay. Hong Kong is closed for holiday. Yeah. Yes. Sorry, my bad. Forgot. Sorry, my bad. Yes, today is okay. Let's take a look today. What Hong Kong holiday? Yes, Hong Kong holiday. Yes, forgot. Yes, 1st of July. Okay, that's all right. Yeah, correct. My bad. Okay, so Hong Kong holiday today is the. There we go. All right, today is the Hong Kong Special Administrative Region Establishment Day. Okay. It's okay, just take note of that. Okay, all right. So sorry, my bad. Okay, guys. So apology for this. Yeah, I just think which holiday is that? I thought it was another country. So my bad. Okay, anyway. So Hong Kong is closed, so we don't have any movement on Hong Kong side. So we look at the China side. China side is kind of now is trading above the MLP. Okay, above the MLP, and but still way below the MA 200 and MA 30. And of course, for this China side, we are having a bearish, we have the death cross, So that's why it's kind of dangerous right now for traders, if you ask me, all right? So traders, please be careful. This is not a very pretty sight at the moment right now. Okay, thank you very much. Thank you for all the sharing. Guys, thank you, appreciate that. Oh gosh. Okay, let me just, wonder my handphone is texting for messages right now. Okay, thank you guys. Okay, so if that is the case, there's nothing much to cover. Let's go back to the market for MAO. All right, let's continue. Yeah, it's the 1st July handover to China. Indeed, forgot. All right, so what are the reasons to stay bullish for the market? Now, remember, guys, my MAO itself, right? I always will start out with the bullish side, the bullishness, then without the bearish side. Okay, so at least the market now consensus is all on the bullish side right now. And of course, some people did ask me yesterday, KL, how come some of the information you get we cannot find on the mainstream media? Now, FYI, right, other than I go for those very dark websites to just get those data for you, I also basically pay Bloomberg and CNBC, the one that, not Colin, okay, CNBC and Bloomberg, okay, I pay for the premium package. I pay for it, monthly must pay money, right, the subscription. And the data there and the information there is much more, it's much more for the professional traders, live data, and of course, it's much more to a certain point, right? That's the reason why if you you take my sharing and you Google, right, you may not find them sometime. That is the reason. Of course, if you pay for the service, then of course, no problem. So guys, think about this. I'm paying and you guys are enjoying. Hey, come on, man. This is fantastic, right? I mean, how I wish I have a trainer last time, do all this market information for me. And then after that, I get to listen for free. Think about this. All right, think about this. This is what we are having it right now. Okay. All right. So that will clarify all the matters. Let's continue. Now you can see the example. You see the pro, right? That means this is actually from the paid subscription, okay? And usually it's premium stuff. Now, of course, sometimes some people do the same thing. They pay for it, they extrapolate it out, and then put in the website, and then they charge money for this. I don't do that here. Okay, I'm not a YouTuber in a way, so I'm just sharing with you. Okay, all right, but I won't go into too much detail to be fair to the company involved. All right. Now, Tom Lee, all right, this analyst, I told you before, I totally give him much respect because not only that I see that the value he gives, and he actually very clear with his direction. And that is the reason why I kind of like give him my respect for his analysis. So with that itself, right, he rises 2021 forecast for the S&P 500. Yes, but he warns of the all right, he warns about this coming July. He feels that, right, this coming July could be a bit of danger. So let me explain to you what he meant, all right? Now, this is Tom Lee, by the way, from Fundstrat Global Advisors. And this is what happened now. Fundstrat Tom Lee has hiked his S&P forecast for this year, but he does warn about July month. I'll talk about this later. Now, he has been perfect in all his calls since the pandemic time, telling you exactly what to do, and he expects now the S&P to rise to 4,600 by end of 2021. Now, remember this number, 4,600, okay? Because currently now, the S&P 500 is trading about 4,300, and he was spot on. Early this year, he gave a target of 4,300, and today, we just saw it, S&P 500 have repeatedly stayed above 4,300. So again, he is spot on, okay? Now, this 4,600 means that he expects it to go another 7% from where we are right now. Wow. So this is a very, very bullish call, okay? A very, very bullish call. So he said that because the economy is going to continue to gain momentum, earnings will keep beating estimates, strong credits and stable rates, okay? So all these things are what he says. And he said that Federal Reserve will continue to stick with their easy policies. And of course, fiscal stimulus, which is like the infrastructure planning, will likely be able to continue. And of course, you don't expect any more volatility from the global front unless something really terrible happens, okay? So at this junction here now, I'm pretty sure now you guys is like, oh, okay, let's go and buy. Well, before you do that, allow me to pull you back for this morning, okay? Now, like I say, I totally respect him. And his track record the last 2 years is amazing, right? Whether it's Bitcoin, currencies, or you're talking about this stock market, or which sector rotation, I tell you this, it's very spot on. But because it's so spot on, right, I'd like you to understand in this article, there's one part he keep on reminding us, is the July month, okay? Now, July month could be a brutal month, okay? Brutal, that's this very word here. July returns are usually or actually mostly poor, and July returns are worse than when first half is strong. Now, it's very clear, first half of this year is very strong. We're up by like 17% overall for the 3 US indices. So what I'm trying to tell you is this, you must be careful for the tough July month. Okay, do understand this, right? Okay, when the S&P 500 is up by more than 13% in the first half, which is like January to June, the month of July usually yields about just 0.4% according to Fundstrat. And this is something that, right, the index usually posts again in July only 50% of the time. I'll show you the numbers in a short while, okay? So in short itself, right, he's telling you this, in the first half of the year is very, very strong, all right, more than 13% on average. All right, usually July month, there will be a pullback. So with the pullback coming in, that will be a great time for you to go into the market and absorb if you think that this will see the direction here. That's why I'm informing you July month to be a bit careful because of this, okay? So all clear on this? This is very, very important information. All right. So of course, he did say that, right, what are the stocks that he always like to look at is basically he's sticking to his trusty group of epicenter stock. All right. So this is a list Uber, Advance, Best Buy, MGM, Hilton, Marriott, Norwegian Cruise, Royal Caribbean, General Electric. Okay, this is all this so-called epicenter stocks. So in short, you can see that, right? As long as there's no pandemic, everything is good, no more virus going around the world, no one having problem, these counters will definitely do very well. But of course, on the flip side now, if there's going to be any pandemic, any explosive rise in the people getting sick, then of course these counters will be hit. You got my point, okay? So that is what Tom Lee has to say for all the bulls today. All right, are we clear on this? If everybody's clear, please key the word clear, C-L-E-A-R. Please, thank you. Do me a favor, just do that. Okay, thank you, Eddie, Carl, Gary, Joe, Wilson, Eunice, Pingwan, Janet, Jerry. All right, so you can understand. That means already telling you what to do already for second half of the year. As long as you know what you're supposed to do, you should make money in the market. Okay, all right, that's something that you must take note of. Okay, let's continue. So I basically get more information for you. So that's why I started this MAO a little bit late, because I try to get more interesting data. So this chart is different from Tom Lee. Tom Lee's data is only just an article. All right, this is what I have taken for you now since like 1968. So we're talking about almost 62 years record. I mean 61 years to be precise. 61 years of record to give it to you. Now more than 50 years record, good enough, right? Okay, so let's take a look what's happening. You notice that, okay, there's two particular months that we need to be very careful. And I did mention to you during our last few MAO, is the month of September. Very surprising, right? Although we do see a lot of stock market crashes that happen in October, right? But you also realize this, when the market crashes in October, the month itself, when it rebounds, right, is also very fast. So that's why, interestingly, the overall, right, October month, although it's a month of crashes, but usually September month is the month that usually the market pulls back. And you look carefully now over the last 60 years, right, the same month is actually month of July. Can you see that? That's the reason why Tom Lee is saying this. Now, I repeat mine again. This chart isn't from him. I got it from other sources. And of course, you can go and do your own dig out on this, but this is interesting, okay? So if you look at the month of July in consensus, all right, look at it, okay? You can see that this is under 2018, by the way, okay? I don't have the latest data, but roughly there. All right, so you can see that, okay, majority of the time, if we have a pretty decisive good months, all right, ahead of time, right? Usually the month of July doesn't do that well, all right? So you can see that. So this is something very interesting, and I think that traders just need to be very cautious to the wind. Now, it will be presenting a great opportunity to buy when the time is right, okay? So this is something that you must take note of that. And of course, the reason why now people have been asking me, Cal, how come S&P, right? Every day we short the market, it goes higher, right? FYI, now, FYI, S&P has had its best first half since 1998. Oh my goodness. So the last 20 over years, S&P this year especially has its best first half. So obviously this is because of the money, the hundreds of billions of dollars that's being pumped into the system, and that is the reason why the S&P has its best time. So with all this thing in mind right now, kind of you must understand that if the month of July doesn't do that well, that is kind of expected, okay? So but then again, because the first half of the year is so good, right? That means that if the price come back down later, it could be a good time to absorb the buy from the low again. So you get my point now. I'm trying to stress here regarding about how I see the market. So you can see that the only thing that's a bit of dangerous right now at the moment, I can see that you can see the S&P is doing well, the Dow Jones obviously doing well, the NASDAQ okay, the Russell is okay, and all is okay. But the one in blue is the one that is called the Dow Jones Transportation Average, which is not doing that well. Okay, now the thing is this, if you, again, I repeat myself one more time. If you actually read what is written, okay, in all the old handout, all old books of the Wall Street legends, right, they always reminds you that the transportation average is a very powerful indication. And whenever the transportation average is actually going down, right, it's not healthy. And statistically has proven that most of the time before a market pullback, usually the transportation average will go down first. So this is something that I want to remind you guys that since Tom Lee is such a good trader, a good investor, then obviously you need to take note of this extra step here. Are we clear with that? Okay, all right. So FYI, S&P is not just only up just like that. No, it's up for 5 straight months and crazily 5 straight quarters. Oh my goodness. That's the reason why you cannot deny the power of the S&P 500, okay? So 5 straight months and quarters. That's why if you short S&P and if you're losing money, it's kind of like you are not that bad. If you're losing less than 5%, and honestly, if you're shorting S&P 500, right, it's still okay, you know. But of course, I say you cannot fight with Federal Reserve. They value traders will sell it down based on profit taking. But if the funds like Federal Reserve doesn't play fair, they come in to pump up, there's nothing you can do. That's why I said, guys, there's nothing you can do when you have the opposite camp is the Federal Reserve. Okay, you got my point, huh? So that is the reason why I'm saying this as a general reminder. Overall, the next 6 months, probably we're going to see some upside, but you must be careful of month of July. Okay, just my point here. Okay, I keep on reminding you. Okay, so this is from the analysis report, and you can see that, right? Basically, this is what most of them have forecast, and we are almost there already. Right. From here onwards, right, all of them are correct, right? Means the top 2 are actually, this for year 2021, so it's still quite far, right? 6 months to go. But you can see that all of them has hit their targets. Like David Costin, John, Craig, all of them has already hit the 4,000 trader mark. So basically, all the analysts are actually got it correct. Yes, all the analysts got it correct. But the only thing is this, if you look down the list further, you will notice that this is where this interesting part here comes in, okay? You can see that, right, from Bank of America, Citigroup, Wells Fargo, Morgan Stanley, Deutsche Bank, they are looking at below 4,000. Okay, so that is where a bit interesting. How come these guys are not getting it correct? So what I'm trying to explain to you is this. Even though we are all working in the financial banks, top 4, top 5, top 10, but still different analysts will have different calls. So different analysts will have different views. And apparently now, those who are here are spot on. Those who are here are actually very wrong, right? So that's why I tell you this, there's always 2 sides of the camp, the bull camp, the bear camp, and getting it wrong, all right? This is something that you must understand this. Now, do note towards a medium average, right? Basically, the medium is about 4,027, okay? So now we are 4,300 level, right? So theoretically, we are a little bit overvalued by at least about nearly 8%. But again, come on, guys. This is just a rough estimation of the consensus, okay? So got it? Okay, so that's why this morning I asked you the consensus. How many of you are bullish, how many are bearish, right? You realize that actually quite split down the middle. 50% are bullish, 50% are actually bearish, okay? All right, so you see my MAO, very fair one, okay? All right, so of course, Steve Henrich drop it in. People ask, why is it going up? Because no one is selling. Why nobody is selling? Because it's going up. Very witty, very smart, summarize it very well. Basically, right, no one wants to sell. Remember this is the last three months of MAO. I've been telling you this. Practically, the people no one is selling anymore because everybody is buying. Because every month they expect Federal Reserve to turn on the tap and pump in the money. And they have been doing this for the last 18 months. So that is the reason why it become totally no need to care anymore. Low, just buy and hope for the best. As long as Federal Reserve is around, no matter how bad the data is, the market will still go up, right? You can see, no matter how bad the data is, no matter how high inflation is, you can see the stock market going up because it doesn't matter anymore. That is the reason why, no matter what I tell you guys, you must remember that, okay? Now, in the second half of MAO, that's where things get a bit interesting. We talk about stagflation, which is definitely coming in. Dollar is moving up. The reverse repo operation is now near to $1 trillion. And the crazy part is that Goldman Sachs just came out, right? This is another pro article. What if, the what if scenario, all right, the bull camp and the bear camp, this is must really watch in the second half of the MAO, okay? Must watch, okay? Now, of course, remember, Susan will go live every day, 3 p.m. to 5 p.m. But there is nothing to change this coming Friday. Now, this coming Friday, Susan will not do live at 3 p.m. to 5 p.m. because we have the internal meeting to conduct. Of course, we have this coming Saturday event. So this coming Friday, 3 p.m. to 5 p.m., Susan will not be doing live trading, but she will be around with me together. We will actually be looking at the market to look at the US non-farm payroll. And of course, we appeal that if you want to join us, you can join us. Just contact Susan and come online. I mean, so-called come to the office, but limited to 8 packs, okay? Right, of course, if you're very vaccinated, that'll be better, okay? That'll be better. All right, so take note of that. Okay, so Susan has been doing a great job. Every day she will give calls and trade, and of course, she go live in the market. So guys, support Susan, right? She's doing very well. Help her out and, you know, give us a moral booster if you can. All right. Now, this coming Saturday, yay, look at it. It's so cute, right? Okay, because Arun sent me a very cute picture. I told our designer, hey, look how to get it done. And the designer did it, okay? Now, of course, you say blue and red. Hey, Kel, this is like the Democrat and the Republican camp, right? Well, come on. Somehow or other, the programmer chose it in the right way. The blue color represent the Democrats, correct? So it's bullish. And red cam, right, apparently now it's a Republican, technically bearish. just by coincidence, okay? But anyway, the point is this, Arun is going to go through all this. Oh my goodness, look at so many great stuff Arun will be going through. So in order to do that, thank you, Uncle Arun. Yeah, indeed, it's a very nice hour. Even I like it myself. Okay, so it's very cute, right? Anyway, the thing is this, FYI, I believe in Singapore, no one covers so extensively in the market. And obviously, this all comes from the heart and all his many years of trading experience. Yo, I tell you this, even you pay money, you won't get any individual person to share all this. Okay, so you must attend. TWB students, you must attend. And of course, in order to do this, Arun is doing this because he wants to help us to make the TWB community bigger. So that's the reason why he wants to help us. So therefore, we need you to bring your friends, like friends, because you can convert them to become our TWB student. Family members is because you can convert them also. If not, at least they can understand that you're in the right position, you're in the right community, and you have the right people. And that's the reason why we insist that your webcam has to be switched on so that your family members or your friends can see the face of everyone. Okay? Now, this is very serious because it's internal. I'm not going to use it for now for marketing. So you guys have to really help us to stick by the rule. Okay? The link should be ready by this evening. You need to key in the Zoom ID. I mean, the name, like my name is Kelvin Han, right? That name must put it there, so that we can recognize, okay? If we basically check the list, we do not see that name down there that is inside the registration page, right? Then I'm so sorry, your friend or even yourself cannot come in. You got my point? So you must do that. That is a rule for this event, okay? There's a minimum rule for a free event for 1.5 hours to even 2 hours. I think that's a minimum requirement, okay? Are we clear with this? All right, if you guys have heard me loud and clear and you know that you know what to do, okay, please key the word webcam. W-E-B cam, C-A-M. All right, webcam on, okay? Right, webcam on, okay? O-N. So that you are reminding everybody to do that. So if you want to join us also, your webcam has to be switched on, okay? If not, you won't be able to hear. So of course, again, then you may say, Cal, then, if that's the case, then, when can we get a replay? I don't want to go online because I don't want to be part of marketing and stuff like that. Well, if you want to do that, then you have to wait until a bit later. But to be fair, I will still put on the replay, but you won't get to ask great questions and you won't be involved. So if that is what you prefer to do, of course, I can't stop you guys, okay? All right, webcam on, okay, right, very clear. Thank you very much. Okay, hold on a minute. Messages coming in. Just let them say today Hong Kong is closed. Okay, all right. Now, let's go to global market first. Okay, first of all, global market, we are having a bit of issue right now. Sydney, right, Australia, sorry. Almost half of Australia's population has been placed under lockdown as authorities face COVID-19 cluster in multiple cities across the country for the first time since the initial outbreak since last year. All right, once again, you see, I got very nice coffee from King Hua again. Every morning I have that. Okay, the thing is this. This is the reason why I kind of tell you July month to be a bit careful because this is something not very nice. So the cluster in this Sydney has went up to 149 cases, okay, and that caused a panic button to be pressed, okay, and that is the reason why you can see now in the Sydney street, right? You can see totally. Now I have not gone to Sydney before. All right, so I cannot recognize this, but I'm sure many of Singaporeans have went there. So you know that this is really terrible, right? When you don't see anybody outside, this is really very bad. Okay, so let's just take a video and watch this, what's happening now in Sydney and of course in Europe too. Let's watch this.
The EU's Disease Control Agency is forecasting that the highly transmissible Delta variant of COVID will account for 90% of all cases in member states by the end of August. It's calling for swifter vaccination programs. Dr. Andrea Amon of the ECDC says the Delta variant will circulate extensively during the summer, particularly among younger individuals that are not targeted for vaccination. Portugal is already stepping up its program in the capital, having seen a surge in cases being blamed on the Delta variant. The authorities have reopened an inoculation centre at Lisbon's University Sports Stadium. The country is heavily reliant on tourism and is desperate to welcome visitors.
Here we are precisely to call on the attention to his priority. This is a race against the clock for the Portuguese. We need the help.
But Chancellor Angela Merkel wants other European states to follow Germany, requiring people entering from countries with high levels of the Delta variant, like Britain, to go into quarantine. That's not what the struggling travel industry wants to hear. Its members are calling for COVID travel restrictions to be relaxed. Many across Europe say those who've received 2 doses of a vaccine, which gives protection against the Delta variant, should be given freedom to travel.
Okay, so this is
EU's Disease Control Agency.
Okay, so this is what happened yesterday when in office. Someone, a student, okay, he's a pilot. He tell me this little story. He says that, right, okay, some of the pilots say that, okay, guys, we have the jabs, we get our swabs. Then, of course, why can't we like off mask and stuff like that, you know, walking around? The thing is this, you must understand that this variant stays in the body. And that's why many people got their jabs and still fall sick. And they got their jabs, they still basically pass the virus around. So sometime in life, right, you cannot be that selfish. Doesn't mean that you got your jabs, you can actually, you know, mask off, really, because the statistics have shown that you still get the virus and you can still pass it on. And the worst thing is this, in your point, is that you say you take your chance, correct? It is you that are taking the chance, but the problem is your family members are not able to protect themselves from you in a way. So if you got the virus, you come back home, and unfortunately, one of your family members can't able to resist against the virus, even though they are inoculated, then what happened? Think about this for one moment. This is something that's why people are very selfish. They just keep on thinking on themselves. I understand that, of course, people want to have the travels, they want to go out to play, but seriously, they are putting people into very serious trouble. And of course, I can tell you this, I cannot understand what's happening now in Euro 2020, but I can tell you this, if let's say, unfortunately, things really blow out of proportion, then definitely we have one big tsunami of potential COVID cases going to spread across Europe again. And of course, this will bring down. So it is actually, whether you like it or not, right, July month seems to be a bit dangerous. Don't you see that? So if your stock market now is being pushed up all the way by the Federal Reserve, right, I cannot deny to tell you this, month of July, please be very careful, because anything can just blow out of proportion, and then after that, statistically, it may be proven by itself, and then of course, market come down. So of course, if you have been making money in the market, just take some profit first. It doesn't kill, correct? Then let the market pull back down and buy again. Like what I think Arun will tell you this coming Saturday, how to know how to do risk management and how to buy when the people are not buying. All right, that is the best part, right? Arun, will you be doing that for us to share how you've been buying the market every time the market pulls back down? I think that is the wonderful part that we're all waiting for. Okay. Now, of course, that's not only Australia. We have around the whole world. So I'm going to bring you one. It's from Singapore, China News Asia.
Local cases here has fallen back to single digits. Singapore's neighbours are seeing a spike in infections due largely to the highly transmissible Delta variant. As the countries race to get most of their population vaccinated, imposing movement restrictions or lockdowns is one other way to manage the virus spread. For instance, Indonesia plans to impose stricter restrictions from tomorrow. President Joko Widodo is expected to lead an internal meeting today to discuss details of the new measures, which include possibly requiring all workers in non-essential sectors to work from home and ban dining in at restaurants. It is unclear whether the new measures would apply nationwide or to only the red zone regions, where cases have been rising sharply this month. Over in the Philippines, existing movement restrictions in its capital region and nearby provinces have been extended until July 15th. This comes as new cases exceeded 5,000 yesterday. Most businesses in Manila remain open, though restaurants are required to operate in a limited capacity. Clubs and cinemas, however, remain shut. Meanwhile, down under, more than 12 million Australians, which is close to half of the population, are now in lockdown. Brisbane today became Australia's 4th regional capital city to restrict movement except for essential reasons for at least 3 days. This was less than 24 hours after a similar move in Perth. They followed Sydney and Darwin, which over the weekend announced longer lockdowns of up to 2 weeks. In Sydney, nearly 150 cases are linked to the Delta variant.
All right, so you can see that, right? I do a lot of homework for you guys in getting videos for you. And of course, main thing is that to avoid advertisement. Okay, but the point is this, don't you see that, right? All the countries around us is actually, they are suffering. So we should count our blessing that Singapore has put the right way to manage this entire COVID. So for us, we are kind of safe, okay? And our numbers are actually going down. That is very, very good job done by our government. But then again, because we are blessed, okay, it doesn't mean that, right, other people are going to be the same thing, right? So you must understand that going towards this month of July, right, what we're seeing now in the Euro 2020, right, I really cannot understand what will mean. I cannot understand that why anybody would do that. But of course, there's so much money to be involved in this sport here. So undeniable, right, we just going to expect the tsunami of problem coming up in the month of July. So that's why I'm telling you, these traders, just go slow, okay? For the month of July, just go slow. Can still long, okay? Please do not mince my word, change my word, edit my word. You know, I'm saying that if the charts call for buy, stay buy. But just that the lot size just reduced dramatically can. So example, usually you trade one contract size, right, for one Dow Jones example, consider to go down to 0.5 or 0.3. If you're still going to make money from it, it's okay. But if the market really pulls back because of whatever reason, at least you will not lose whatever you've been making. But when the market hits a very good low level, whereby all the indicators are calling for buy and everybody around you are selling and the price is not coming down, that is the time to buy. You got my point? So please understand how to trade in the market and not jump into it. No impulse trading, as I said earlier. So now Singapore community cases have really go down, but this is something to note of, okay? So some people tell me, KL, every day talk about COVID, you know, don't get sick of it, don't worry. Singapore side going to stop already. Say MOH to stop giving details of COVID-19 community cases already. So don't worry. All right, why? Well, first of all, we have more than 57.5% of Singapore population has partially vaccinated, so which means that, right, things are supposed to be better, okay? All right, and of course, all this thing tells you that Singapore may want to move on because like our Trade Minister, Gan Kim Yong, is saying that, right, well, bad news is COVID-19 may never go away. But the good news is that possible to live normally with it in our midst. So we're trying to say is that, okay, we can just turn pandemic into something less threatening, like influenza, like hand and foot and mouth disease, or even chickenpox and get out of life. In a way, trying to say, okay, guys, don't get too emphasized on this. Well, first of all, the death rate is not really alarming. Second of all, right, people that pass on, unfortunately, are still the older folks in a way. So hence, therefore, you know, don't panic. Let this continue. Let us return to normal life, resume travel, resume tourism. So that is what Singapore is going to do. And I just hope that this is the right move, okay? I say it again, Singapore have been doing well. Let's not, you know, go further, okay? So let's just see how it goes, okay? But end of the day, guys, we have to live with it, okay? Now, yesterday, I told you the ADP will be better than expected. Indeed, it really came out better than expected. But of course, I'm looking at 640. It came out 692. So yeah, but off, but it's the right direction, right? Now, the pending home sales, I told you, will be very high, and indeed it came out 8%. Now, the previous was minus 4.4, previous was minus 4.4, and they're looking at the minus 0.8. But come on, man, look at it. It's 8%. Oh my goodness, 10 times. Okay. All right. Now, crude inventories, very interesting, keep on dropping. So the inventories keep on dropping means the price keep on going up, Lord. That's the only way. So inventories dropping means what? Is it because of lack of demand for it? Or is it because that there's no people doing it? So if that is the case itself, right? Let's say this happened. If we're going to be because no one is doing this, okay? All right. And the demand is there and that led to price going higher. My question mark will be next is what if, okay? It's a what if. What if a pandemic coming again? Okay. Demand is still there because people still live on, right? But lesser people get involved in the crude oil industry, then what will happen to the price? What do you think, guys? Answer me. If let's say, if this really happened, if let's say the next 2-3 months, another wave of people falling sick happened, okay? Then what will happen to the crude oil price? What do you think, guys? Please key your answer right now into the group chat so that we can see whether are we able to have the same page of thinking. All right. So of course, again, this is a very personal thing. No right, no wrong answers. I'm just sharing with you. What do you think, guys? If let's say that we have another slew of a pandemic problem coming in, what do you think will happen to crude oil price? Okay, Carl say drop. Wilson say drop. Anthony say down. Gary all down. Okay. All right. Okay, Desmond also down. Okay, demand, I think it's demand, not Damon. Okay. All right. So majority of y'all say down, right? I will tell you my personal take. It's up. It's up. Yes, it will be up. Now, why do I say that? Because it makes sense in my perspective, okay? Now, you must understand that going the next 6 months, we're going to enter our winter period. So if there's going to be another pandemic, all right, yes, there will be initial drop first. You're not wrong to say drop first. But I can tell you this, that will propel the demand to go even higher. Inflation will shoot through the roof. And then what happened? All right, all the commodity prices will be going mad. Yes, going mad. Yeah, because you must understand the difference between last year and this year. The last year, we don't have people running around because we have not get our jabs. So that's why the demand drop, hence prices fall. But the thing is this, in order to salvage the situation, Federal Reserve central banks pump in so much money into the system, causing the prices to go up. And because the prices go up, it's because of the pumping of the dollar decline, right? And then that also created the commodity prices goes up. Now, if that's the case, now when everybody is so-called get the vaccination, people will still go out to work, or maybe half of them, and then that will create the strong requirement for this. And of course, in the second half of the year, it's supposed to be colder. Then what will happen? Prices of crude will go through the roof. So that's why I believe that my personal opinion on crude oil is that now we are at about probably $73, right, at the high, somewhere here. All right, there will be a pullback to maybe $68 at most, in my opinion. Then after that, we're going to see this. We're going to see at least about 85 to about $88. Okay, $100, I don't know where you can see there, but $85 to $88 will likely be the target for the end of this year, 2021 December period. Okay, so that is my first call for today for crude oil. All right, so this is my point here. Of course, I can be wrong. Who knows that you guys may be right. Maybe all the way go down. It is also possible. So we can leave it there, but it's just for open for discussion purposes only. Okay. All right. Thank you very much, guys, for participating. Okay, that's how we learn. Okay. Now tonight we have the initial jobless claim, and it's for 390. All right. For me, it's all right. I don't think this jobless claim will be at 390. I'm going to write my number down, and just for the fun of it only, I expect it to be about it should be about 370. All right, my personal view on this. All right, so I think it will drop because the ADP numbers has went up. So kind of jobless claim will likely be going down a little bit. Now, if of course if the market goes past 450, the market is bullish because why? The thing is this: when the ADP number was better than expected, right? Normally, it is a good thing. But because now the market don't want good thing, they want bad thing. Because if there's bad thing, then the Federal Reserve will have more reason to stay with their QE. But like I say again, it doesn't matter anymore whether it's bad or good, the Federal Reserve will come in. So you understand why? So whether this or not, right, it doesn't change. But I suspect the ISM data will drop. I suspect it'll be about 59. Okay, so this is my personal take lah. Anyway, like I say, all this data has no value anymore because the market doesn't care. They're going to buy. But of course, come to July month, just be very careful. Okay. Now for the Dow Jones yesterday, as I said again, you can see on the chart very clear. Once they start opening, it doesn't stop anymore. And this is something very normal. And until we find if the market is up in the first half of the day and we stay on, it will end normally at the day high. And indeed, it really happened. Okay. All right. Okay. All right. So let's look at what happened last night. The Dow Jones rose 200 points. Okay. And S&P hits record high again, as I told you. So what is happening right now? So we have strong data like Walmart, Boeing, Goldman Sachs. Okay, just now I think Cheng Kui did mention about how he sees the earnings result from coming July month for the second quarter, right? I cannot deny, yes, indeed, most of the companies will do pretty well for the second quarter. Yeah, they do pretty well, especially the tech counters, they should do very well. But the problem is this, people buy on anticipation, they sell on facts. So you get my point? So I suspect that, right, we should have some movement, which we already had on the technology side. I cannot believe that during the earnings result, right, people will take profit instead of buying. Now, one thing that you must take note is actually the one big reason to be very worried about is actually next year. Because if this year do very well in terms of earnings, and next year, if there's going to be a chance of any interest rate hike, right, then definitely all the earnings will be affected. So that's why actually next year is all right. Traders we need to be very careful, right? Because of this is actually very clear. The pathway is very clear that we're going to have interest rate hikes and reducing the tapering. All this will happen in the first half of the year 2022. Okay. All right. And of course, the investors have struck off high inflation reading. I told you guys, it doesn't matter anymore. And everybody is just buying stocks because everybody is just hoping for the economic recovery or the comeback from the pandemic. So that's why you can see keep on buying. So at the moment now, right, with the economy allowed to reopen at a rapid pace, so and 60% of Americans have already had their COVID jab. So I can tell you this, there is no reason to stay out on the market. So that's why Tom Lee says that, right, there is loads of reason to be staying constructive. But of course, as I say, he reminded that month of July, just go slow, then later on, maybe it's time to buy again. So pending home sales of course went up, right? I told you. Okay, all these things are all spurring the market. And of course, the ADP we saw already, right? Pretty good. Okay, so all this tells you that the market is very bullish right now. Okay, now in terms of news, other than basically wrapping up for the first half of the year, other than that, I don't see anything. And yeah, I can't find any much big news for you on the mainstream media lah. All right, so I'll leave it there. Now let's look at the Dow Jones for today. For yesterday. Okay. Now yesterday was what we told you guys. It is a what day again? A doji day. All right, a doji, D-O-J-I. So a doji day will lead to a directional day. Directional day will lead to what? Meaning above OP you buy, below OP you sell. Correct? Because likely it will close at the high or close at the low. So you tell me yesterday the Dow Jones closed at the high or closed at the low. So it was no brainer that yesterday after the initial sell down, all right, the market U-turn. Now, once the market U-turn above the opening price, you have to go long or you not stay out from the short. And of course, you know that on the doji day, the next day, high chance of directional day. Now, of course, this is my creation, right? You can't find this in an textbook. And I told you already yesterday, I even do MAO tell you that if the market is a doji day, likely next day is directional day, it will either close at the high or close at the low. So the market chose to close at the high. Can you see that? So it's a no-brainer yesterday that once the market crosses above OP, right, you just have to do what you need to do. Okay, is to stay long in the market. All right, because yesterday got no pivot, right? So let's take a look what happened. So yesterday, the market ding dong, ding dong, ding dong, ding dong, ding dong. Okay, where is the first sign of trouble or movement? This guy. Can you see that? This is a BMB. So again, you put the line across it, which I told you many times. Once you put the two liner, the high and the low, whichever the market choose, you follow. So it was very clear the market chose to sell. So the market fell. And because the KSI was red, I told you mathematically it will go down to KTR -1. And indeed, it all happened. But then the best part is when it hit KTR -1, it basically stopped there. Now that is the first sign that, hey, the market may rebound. So it went up again, right? So what happened? The market went sideways, couldn't cross KTR, couldn't cross opening price. I understand. So if you went into short again, there's no wrong, but there's a problem, my friends. Look at the bottom of the screen. Look at the KSI. Tell me what color do you see? The KSI is green in color. All right, and I told you guys many times before, PDP student, you also remember that when the market is coming down like this and the KSI is up like this, the market cannot break the high. Once the market breaks the high, normally the market will go up. And of course, so look at it, right? The market went up. And of course, after that, it went all the way up to close near the high. And of course, when it stopped at KTR +2. Now, by right, it should stop at KTR +1. But do you see any color change here? Don't have. So no color change here, you cannot do any short selling. So that's why yesterday when people text me on the site, they asking me, Cal, can short the market when it was at KTR +1? I say, do you see any color change? They say no, then don't short. Okay, that's a good reason why we have a system to inform you what you can do, what you cannot do. All right, so please be clear on this. Okay, please be clear. You can't. Yesterday you can't. So this is a very clear explanation of what have happened. I really hope that you guys got it. Okay, if you got it, please key the word "got it" right now. Thank you. Okay, thank you guys very much. All right, so you can see that you guys know exactly what to do and you just have to follow the MAOs or in the chart yourself, okay? All right, sorry. Okay, no, let's look at the market right now. Oh, what happened? Wow, China A50 dropped so much. Okay, what happened? Okay, so suddenly China A50 had dropped below MLP. And of course, if you ask me what happened, I don't know what happened, but you ask me technical what happened, I can tell you this is death cross. Death cross basically means that the usually moving average has two, right? One is the shorter time frame, one is the longer time frame. So my longer time frame, the blue line is MA 200. The shorter one is MA 30. Okay, let's show it to you one more time. Okay, MA 30. Property-wise, is linear weighted. Now, different school got different way of teaching. So somebody did ask me last week, okay, Kel, how come the other trainer teach us use the simple moving average, and which is correct? I say that while everybody in wrong, okay? Everybody got their right way, because sometimes the simple moving average will be, wow, hit and go. Sometimes mine doesn't happen. So there's no way to say who is better, which is better. If you want to compare and contrast, then you can put them together side by side. Don't put them together same place, but side by side. Okay, one is SMA, one with the one that we're using. But the question is this, end of the day, even you have all the indicators and lines, but you do not know how to apply it correctly, or you do not have the discipline to do it properly, or you don't do risk management, right? End of the day, you still get hit. You got my point. So now what we are seeing is that this is what's happening right now. The market now is trading below. Okay, trading below, all right, the two moving averages, okay, and this is not a very good sign, right? Okay, it's not a very good sign, so that's why maybe this causes selling in the market. Now, another one I look at it is this one here. I'm gonna be upfront with you guys. Now you look at this particularly big candle that is down so big, right? Up so much, right? Then after that, you notice that it couldn't go any higher. So this entire movement is about, how big is this movement? All right, this entire movement is about wow, how much is this? 86.8. It's about one single day, about 800 points. Oh, serious, 800 points. Okay, so if you're gonna go down, it had to go down by technically 800 points. So that means that, right, there is a possibility to see China A50 coming down to this point here. Because this is a chocolate bar that looks pretty nice. So there is a small possibility that China A50 could drop all the way down to this point. And that will give you about 16,685 range. Okay? All right, so that is my personal forecast on the China A50. And of course, if China A50 drop to this level, Hang Seng may also be dropping that much, okay? So just think of that. Okay, so that is what I need to share with you for the S&P 5, the China A50. Okay, Dow Jones, let's take a look. Okay, now Dow Jones, wow, very nice. Dow Jones has now touched the MA30 and rebounded. So yesterday, MA30 was 34,248. Once it touches it, straight away rebounded. Okay, now take note of the blue line. The blue line is the line that I left it there to indicate what happened with the MA30. Okay, so that means that now the next day it will go higher, right? Because market is overall up now. So look at the blue line again, everybody. The blue line, 34,248. Okay, now I'm going to go down to a lower time frame of yesterday. Everyone take a look. Okay, so this is what's happening today. Now, everybody ignore the blue moving average. Just focus on the blue line, the blue horizontal line. Now, watch carefully. Yesterday, when we were trading here, the market went up, went down, went up, went down, went up, went down. Now, do you notice that when the market came down to the MA30 of the level that we mentioned yesterday during the MAO, the market stopped there beautifully and then rebound. Can you see that? That was why moving averages, when you get the line from MAO morning, you take this level, put it into your so-called your chart. The problem is this. If you do not put this line, the number that I mentioned in the morning, and you put it into the chart, right? What happened if you use the so-called the MA, this line, right, and put it into intraday? The problem is this MA is not calculating the day chart MA already. It's calculating based on the intraday number. So by theory itself, right, it will not be that accurate. You understand my point? Of course, on hindsight, you may say, Kel, you see, it went up what? Yeah, but the thing is this, you will notice that when the market breaks the MA line yesterday, you look at it, that's the reason why the Dow fell. Then after that, why it got resisted? Because it just couldn't go past the line. But once it couldn't go past the line, and the next time it go above it, that is the reason why the Dow shoot up all the way. You understand? And it's very important that they put the MA in the morning. Don't do it like afternoon and the evening, because obviously the data is already running, right? So it will not be that accurate. Now, do note, day chart MA is moving as the day progresses. So, of course, the movement is not that big, but it still moves. So that's the reason why we have morning MAO, and we put a line there. And you notice this, I won't change my line for the entire day, because I will show it to you how to utilize it the next day. So you all got it? If you all got it right, can you put the word MA, M, and A? So that means that you guys have understand how we utilize the moving average here. Okay? All right, while I wait for your answer, I'll put for you down today. MA will be here, which is about here, 34,281. All right, so obviously very clear that we are having a market that's way above the MA30 today. So bullishness is going to stand. Now, yesterday, we also have a new BNB, right? So the one earlier will no longer be usable. The new BNB is going to be here. That's a high. And this is the low. So which means that now we have a new BNB already. Wow, okay. New BNB, right? So which means that if the market is going to stay positive, it can go up as much as this entire distance. So how much is that? Let's take a look. The entire distance will be from the low to the high is about 450 points. Wow, 450 points. So which means that if the Dow Jones go up, right, Dow Jones can go easily about 35,000. Wow, okay, 35,000 will be near to the all-time high level, right? 35,000, okay, very nearby. Now, of course, if the Dow Jones stay down, then of course it will go down by also the same magnitude, right? About 450 points. And that will give you about 650 around there, 680 around there. Okay, so Yu Ming, I think you have bought the Dow Jones, right? So now you can actually try to put the SWL already, and then after that, hold your position all the way to even 35,000. Okay, so that is what we can see on the Dow Jones coming week. All right, so as long as the Dow Jones stay positive, there is a high chance that the Dow can go up to 35,000. But if the Dow Jones were to come down, then of course you can go to a point of 33,680 range around there. So this is how to do the risk management. Okay, I give you a simple risk management. Think about it. Okay, so if now the Dow Jones is very near to the BNB high, right? So if you buy the Dow Jones above here, your upside potential, I say, is about 450 points. You got it? But if the market stays below the BNB RL and you short from there and you aim it all the way down, wow, that means this potential trade could be as much as a 900-point trade. 900 point. So the upside is 450, the downside is 900. So you do understand why probably it makes a lot of sense if, let's say, today or tomorrow there's some profit taking in the market. All right, because BNB, I told you guys, the accuracy is impeccable, very accurate. So you can consider to take this risk trade. Okay, risk trade. Okay, why? Upside and downside is 1 to 2 value. Okay, so of course those who are very long from the yesterday, just let it go, continue let it run. Okay, who knows, may go higher. For those who want to take adventurous trade, right, you can consider doing this. But do understand this, it will cause damages initially because the market may swing and swing and swing for days before it actually starts to move up or move down. So please understand this. Clear? Okay, all right. If everybody clear, please key number 1 right now. All right, because today we have a lot of things to share with you. I want you guys to know exactly what you're involved in and get it correct. Okay, thank you. Now the monthly chart, right? You can see, I told you guys, who knows, the market may reverse, and indeed the market really reversed all the way up. And now the monthly chart looks pretty, very nice. And the weekly chart, right, is also quite nice. Take a look. The weekly chart, right, is touching the so-called my short-term line, trend line, which I left it on purpose, even though by right, it's already should be deleted away. But because last week, the market rebounded so strongly, right, I kind of leave it there to just give me a bit more watching on this. So as long as the Dow Jones stays above 34,600, right, we should see the Dow going up higher. Okay, all right, so that's the reason why I leave it there. Okay, so let's look at the Dow Jones for today, this morning. Let's take a look. Now, Dow Jones today, what happened? Oh, let's do again. What happened today? Dow Jones today, again, no pivot. Today, again, no pivot. So again, today, you have another interesting day to trade. So very simple. All right, this is the opening price of the day. As long as the Dow Jones stays above OP, we're going to see upside, okay? If you're going to go above OP, upside. If you go down below OP, sell side. Okay, now because the KSI is green, so the probability of the market going to KTR +1 is going to be very, very, very high. So take note of that. But the time factor is very clear. If let's say by probably 1 or 2 p.m. Singapore time, the market still cannot go to KTR +1, then be careful. If it goes below KTR, go below OP, it should go down to KTR -1, but it could be a touch and go and rebound from there again. Now, yesterday, the Dow Jones closed above the cage RL. So by right, you should see further upside, which already have happened. So the cage has done its job already. But of course, you want to be very careful. The cage RL can be used as a form of a support level. It means that as long as the Dow Jones stays above the cage RL level, the Dow Jones should be still positive. Okay, so the RL level, what number is that? The RL level is 34,517. 34,517. Okay, I'll write down for you. 34,517. Okay, so as long as the Dow Jones stays above 34,517, the Dow Jones is kind of safe. Okay, all right, clear? All right, good. So they're giving you idea what to do. You just do all your best. I'm sure you can make money. Now the NASDAQ continue to break all-time high. I've been saying, but of course we have seen another black closing day. So let's see now, put the MLP in. Today, the MLP is about 14,586. 14,586. Okay, so we have that. So if the NASDAQ is to stay below OP and below the 14,586, because it has already triggered this morning, then maybe we may see some profit taking. But the profit taking won't be too far away. Likely it will be just only here, the MA30. The MA30 for today is about 14,168, okay? Oh, nice number, 168. All right, so if the NASDAQ is a pullback, this is the first support. So I don't think it'll crash off in a single day. So I still think it's pretty positive for now. But if traders, you are long in a position, do consider to take some profit. You know why? You look carefully here, the higher low 1, 2, 3, 4, 5, 6, 7, 8. Right, for 8 days in a row, the market has been very steadily higher low formation all the way up itself. And this is like more than 40, it's like 40 degrees in angle. So usually when you see this, we always know that there could be some profit taking. So you look at the past history of this NASDAQ, whenever it goes in a very interesting uniform manner, there is some form of profit taking. So the suspect is I do see some profit taking to come, but once it pull back to the MA30, it could present itself another great time to buy to go up again. Okay, so traders, you heard me repeatedly telling you what you can do for today and this coming week. All right, so I leave it to you to make your own final decision. Okay. All right, so how about this one? Okay, the NASDAQ today for our indicator. Well, NASDAQ already get done with the zebra, right? So let's take this away. Okay, so today the NASDAQ is within the 2 pivot point, pivot 1 and pivot 2. So interesting, right? NASDAQ got pivot, but Dow no pivot. So they are not uniformly together. Then some more important thing is that it's not because that we use high and low for resistance support. Neither is mathematics. If it's going to be mathematics or the high low of the chart, then obviously got pivot. Correct. But why got no pivot, right? Because it's a maths formula, and this maths formula very unique one. It's basically based on the chart pattern of the market. That's why I say this. Our pivot is not the usual thing that you see in the market. All right, many schools got their own pivots, okay? Just at this school, the way we use pivot is very different. Okay, anyway, so today the KSI is green in color. So as long as the market stays above OP, there's no reason to panic. But of course, even the market go below the pivot 2, the downside will be limited because the KSI is green in color. Okay, all right, last one, S&P 500. Now you can see the S&P is also doing the same thing, but yesterday S&P also created their own BNB. So let me just bring up for you. This is MLP for S&P, it's 4299. The high can be used for resistance and the low for support for the BNB. So which means that as long as the S&P stays above MLP for today at 4299, S&P should be safe. If the market really loses the 4299, the downside should be the most about 4279, about 20 points are around there. Okay, so I don't think at the moment now there's any reason to panic over this market. Okay, no need to panic. Okay, so you get it clear? All right. So now we are done with all this. Let's look at DAX right now. Now DAX, very beautiful. Yesterday I told you, Arun, DAX will come down. And of course, DAX hit the support level beautifully at 15,460 level. And I found your PTP trade. You will know that why I have this line here. And if you buy at this point, you already make about easily 100 points for the DAX. Okay, so now you got an idea? Okay, let's do it today's market. Now today, MA is somewhere near here. Now today, MA is about 15,614. So I can write it down for you. The MA is 15,614. So as long as the DAX stays above 15,614, DAX should be going up. Okay, the MLP for today is somewhere nearby here, and that's our 15,623 level. Okay, so for me, for DAX, because it's self supported, so DAX today will test 15,614, and likely if it stays above it, it should be able to go higher. Okay, all clear on this? All right, so that is DAX. Okay, so I covered all the market or Nikkei, yeah, Nikkei. Now Nikkei, I already told you guys to be very careful. Yesterday Nikkei basically triggered both sides. It triggered the MA30 and it couldn't go up, came down, but it hit the MA200, it rebounded. So that shows that the MA200 is very, very powerful, okay? Now for this one here, how do I see this for today? Okay, first of all, I want to show you to you slowly. I'll take away a line first. Okay, hold on. Okay, first of all, we can see that we have two MAs here, right? Okay, so MA, this is MA30, this is MA200. So we have the range right now for this market. And now we are actually approaching the MA200, which I think just now trigger already. So whether can it stay supported, that's another. Now, look at this. This is a BNB, right? Yesterday, created a BNB. So you draw two BNB lines. So you have your range. So which means that the Nikkei, if it can go up, right, it will have to go past here first, which is about 29,000. Then it can go higher, okay? But if the Nikkei breaks the MA200, it will come down to test the support level, which is about 28,520. But if it cannot stay, it may drop down and may go down by the same magnitude of the range here itself. So I kind of suspect that, right, Nikkei may actually come down. There's a chocolate bar that is going to be usable. It's here. Oh, it's being used. It's KCB, in fact. So it should be here. All right. So that is the range I'm looking at. It's 27,900 range. Okay. So that's a Nikkei for you. Okay. Right. So we have covered everything, all the market. Let's do a quick one on China A50 once again. China 50 today has created another BNB also. Oh dear, another BNB. So today we have many BNB. Yeah. So that means that you're going to make a lot of money, my friends, because the next big movement is right. You just capture this and go for it, right? You can make a lot of money from the market. Okay. All right. Okay. So that is all for this indices. Let's look at the commodities, which is the gold market. Okay, gold yesterday. Initially, it came down all the way. Then after that, rebounded. That was the day before. Yesterday was sideways, all the way sideways for a couple of hours. Then after that, gold went all the way. All right. Then it hit about 1774 level around there. Then fizzled off to close about 1760 plus. So is gold finding a base soon? Well, I believe that gold is finding a base soon. And in the news whereby you can see now the mainstream media telling you gold set for the biggest monthly drop since 2016. Gold is going to go down further. I love this stuff information. Whenever I see that the mainstream media now is on one side, I love it. Because why? It's very simple. If the mainstream media says that it's going to go down, gold will go lower down, then if I look at the chart, if the chart still go down, I leave it there. It means I'm not going to be bothered by this because it's already infused in the market. But if the mainstream media say it will down, be terrible and stuff like that, but the gold price doesn't go down. Yes, if the gold price doesn't go down when the mainstream media say it will go down, right? So what will the market do? Can you tell me, guys? Please tell me, if let's say the mainstream media call for down and the gold price doesn't go down, what do you think will happen? Right, key your answer right now. I think the answer is pretty clear. All right, help me to key your answer right now in the group chat. All right. Okay, line say up. Jerry, Susan, Anthony, Gary. What is Eric saying? Up. Okay. All right. Holming, Desmond. What is Andrew saying? You guys are very cute with your answers. What is a J? Okay. All right. Is it a typo? Okay. Doesn't matter. All right. The answer should be up. Yeah. That's why yesterday when the gold was coming down itself, right? Although the dollar was also rising, right? But you realize that gold didn't come down much yesterday. Yeah. I mean, it was up initially. Like here, it was up initially. But don't you realize that at the same time, the dollar was also going up at the same time? So I told you guys, it's all right. There are times whereby overall dollar will have impact on the US gold, but not directly like that. You know, it doesn't mean that today, I mean, you were like, wow, dollar up, gold will go down. It doesn't work that way. Overall, yes, it does work that way. Overall, meaning the general field. But intermediately or as it trades, right, not exactly the same. So that's why you need to have the chart to protect you and not just see the dollar index chart and say, oh, dollar is going up now, the gold will fall. It doesn't work that way. Really, I'm not kidding you, all right? So, okay, Carl, that's almost there. Okay, so that is what I'm trying to explain to you. Okay, so let me explain to you now with the chart. Okay, first of all, we have the Dow gold price opening price is here. Okay, color not very nice. Okay, let me just take it away. Change color. Now the opening price of gold is here yesterday, and it was just marginally below the pivot one, marginally below. Now I already said yesterday, yes, the KSI is green in color. So the right thing is, if the gold goes below OP, it will go down to KTR -1 easily, right? I said that yesterday. But I also tell you that if gold goes above OP, then based on rule, above OP, above pivot 1, can you tell me buy or sell? Please, guys. Above OP, above pivot 1, buy or sell? Please answer me right now. All right, this is our revision time also in a way. Let's us revise this, okay? Above OP, above pivot 1, what should we do? Buy or sell, right? Give me your answer right now, okay? Yes, the answer is correct. Only Anthony really got it correctly. It's the answer that I'm looking for is, all right, buy. But not only buy only, you must do it the right way, right? The right way is have to do CCRY to buy. Yes, correct. So did I ever say must look at the dollar, must look at this, look at that? I never said that. The answer is pretty clear. Above OP, above pivot 1, there's only one answer to do, just buy. All right, how do you buy? Do CCRY to buy. That's it. There's nothing else you need to be bothered. And you look at it, my friends, that is how the gold yesterday works. So initially, gold was trading already above OP and pivot 1 initially here. But the upside was kind of limited. Then it came back down because the KSI is red. So the price came down and really come down to KTR -1 as we mentioned yesterday. But you notice that the moment it hit KTR -1, right, almost instantly it rebound already. Almost instantly it rebound. And the KCX was at the bottom. And the KSI, look at it. The market was coming down, but the KSI is green in color. Guys, you must understand, you put this indicator, you put this gold chart with any indicator, stochastic, Bollinger Band, MACD, move, whatever. When the price is coming down, all the indicators in the world will be pointing downwards, correct or not? All the indicators will point downwards. RSI, stochastic, Bollinger Bands, anything you can think of will point downwards. Which indicator in the world will give you the buy signal? Only our indicator. The thing is this, I know that some of you guys are trying to figure out the moving average usage of this color change, okay? I'm not going to say that you're right or wrong, but don't you realize this? I did not only emphasize that we need to see colors. I gave you KTR, I tell you pivot, I tell you the importance of the KSI, and of course now the KCX for gold and Bitcoin. You need to put everything together to know this thing. That's the reason why when gold came down to 1754, right? I keep on telling you guys, those who are short in gold, buyback position, all right, buyback position, right? It's a good idea to do that. Then after that, you see ding dong, ding dong, ding dong, ding dong. But don't you notice this? The moment it goes up, don't you realize that when it go up, right, this is actually a color change, okay? Why? CCR is the color. Y is the color change, the signal bar. The entry bar is the entry bar is part of it. So the entry bar, when it goes above the pivot 1, right, that means once it crosses pivot 1, you can enter a buy immediately. And of course, what happened to gold price? Gold went up. You see that? Gold went up. So does it care about the dollar? It doesn't care. It just has to follow the market. So that is the reason why I keep on reminding you this. If there's any part of the system that you must take away from it, I already tell you 10,000 times easily. Above OP, above pivot 1. Below OP, below pivot 2. These two really, really scores very, very well, regardless of fundamentals. Right? I cannot say it's 100%, because if I say that, then if one day it happened to fail, you guys will jump on my back. But if I've been hearing my MAO for the longest of time, I've been saying this like a broken recorder. Do you understand my point here, right? Now, ask everybody here, there are 70 of you, okay? Remember, ask yourself one question. Out of 10 times, whether it's above OP, above pivot 1 buy, or below P2, below OP sell, out of 10 times, how many times do you see being accurate? Can you tell me your answer? Out of 10 times, how many times do you see being accurate here yourself? All right, this is something very, very important, okay? Very, very important. You must understand this, okay? What do you think? Okay, what do you think? All right, give me your answer right now, okay? Okay, so let's look at the gold market as you give me your answer. Okay, now this is the gold chart right now, and you can see very, very nicely now gold has stabilized itself at above the 50% mark. Okay, this is something you must take note of that. And those who are in the gold challenge, please be standby, okay? Please be standby. This looks beautiful and this looks delicious, okay? This looks delicious. All right, so I can see Fred, Anthony, Jerry, Eric, Michael, all you give for 80%, right? So you know the rule. If 80%, think about this. This is a very high scoring indicator already, very high scoring. So guys, now what you're seeing is that the gold, although it's below the MA30, it's below the MA200, but still, okay, we are seeing a very nice support now at about the 50% mark at 1761 level. So I kind of believe that, right? If you're going to buy gold now, okay, your support is 1761. So which means you're wrong, you're down by $10. If you're right, we may see gold going higher, okay? So gold today, the MLP is somewhere around here, and this morning gold already hit the MLP and rebound. So this tells me that gold got some support today, all right? Gold got some support. So if gold really goes up further, there is a possibility that gold might be able to break below this downtrend line and test back here. Because there's a very strong imaginary resistance here, and that's about 1788 level. Or to be precise, 1789. This is a very strong imaginary line at 1789. So if gold can stay above this level, right, 1789, gold will likely be going higher, okay? All right, gold may be likely going higher itself. All right, guys, okay, Andrew says 65%, okay, no worries. Right, guys, basically give me a moment here. I need to tell you this, we will... Okay, guys, I'm back. All right, so apology. I need to make a very important phone call because after this, I need to rush somewhere very important. So that's why I cannot go pick up the phone. So apology on that. Let's continue then. Okay, so now gold price is trading at 1773.22 right now. And this is going to be pretty clear that gold may be going up today. All right, seems to be there. Okay, so we look at gold with our charts right now. Weekly chart looks pretty good, pretty nice. So if it stays there, who knows, gold may go up back again to the 38.2 level, and that's for 1835 level. Now, I just saw that the Andrew says 65% accurate. Okay, all right. My books, every morning I do the screenshot of the charts. Every morning I do that. So I know that actually the accuracy is not anywhere lower than 80%. I'll be honest with you. Like maybe I say 1 or 2 times we skip the trade, but you don't know overall 100 trades, right? I'll tell you 80% of it actually above OP, above pivot 1 will really work. But of course, again, everybody got their own view on this. I will leave it there. Okay. Now today gold is pretty clear. You can see that gold now is trading beautifully above pivot 1 and above OP, which I told you guys that why today gold likely will be going higher. Now this morning, Sister Cynthia already tell us that gold opening price is actually above pivot 1, right? So obviously it will be bullish, but I did tell her that in order to be bullish, it has to stay above the opening price of the day. So only when you go above opening price of the day, then the gold can go higher. And the thing is that the KSI is red in color, so that is the reason why I say that the upside will be probably limited at KTR plus 1 first. If the market can stay above the KTR plus 1, then maybe we can see KTR plus 2. So if you're asking me, is that right? Should I procrastinate to buy, then you're very wrong. You should go in as early as possible, above OP, above pivot 1, which I entered just now moments ago. And if you look at the chart, you can see that, wow, look at it, amazing, right? Look at it, it's so beautiful, look at it. First of all, you have the BNB coming down, but that's very early in the morning, the price goes down, fair enough. But look at it, the gold came down, but it misses the pivot 1. I mean, it can't even go to pivot 1. And look at it again, when the price is coming down, the KSI turned green. Look at it, the KSI actually turned green. So which means that this CCRY is very good. And this BNB, my God, this is a BNB, and of course the TSCB, all of them gave the go ahead. So this is where you should be buying above OP, above pivot 1. That is where you should be buying gold, right? And of course now, see that gold is already surging higher already. So will gold be going up further? Well, very high chance that gold will be going up towards the pivot KTR plus 1, right? So I'm going to be very clear that likely gold will be going up towards KTR plus 1 later. Okay, gold is going to go up to KTR plus 1 later, and this price is 1776.97. All right. So guys, this is how we trade in the market. You just have to follow the rules. Okay, 1776. Now, once you hit there, the question mark is that hell will go higher, right? Oh, that's a good question. I can't tell you for now because why? The KSI is still red in color. So maybe we want to come back down first, then maybe we buy again. But of course, it must still be above OP, above pivot 1. Okay, all right, got it? Clear? Okay, so if all clear, then of course silver will be also the same thing. This is silver. So today silver is a buy. CCRY today is a buy for silver already. Today silver is a buy. CCRY is a buy, right? So silver also KSI is red in color, but you can see the KSI rate is declining at a very fast pace. So that's why silver today, if it breaks 26, if it already broke pivot 1, silver has a possibility to go to $26.88 in the near term. All right, because of the KCB there. You got it? All right, and the KCX already blink at the bottom. So that's why silver likely has bottomed out this round. So silver and gold should be going higher in this coming 1 or 2 days time. All right, traders. All right, hope you guys will make a lot of money. Remember that we are here to help you to make money, okay? The more money you make, the better it is. All right, so that is the market for the commodities. One last one is the crude oil price. Now, crude oil has came down but refused, okay? That's really the downside is really incredible. It's so strong. It just couldn't go down. So I can give you the next chart with the gold. This is going to show you. This is the dollar index chart. Look at it. The dollar is going up right today. The dollar is going up, but still, wait a minute, the data is not coming in. Wait a minute. The data is not there. So I can do just, no. Okay, yeah, here we go. See the dollar index chart. The dollar continued to go up the last few days. So the last few days, the dollar actually went up, right? But the crude oil also flattened out. So which means that the dollar index goes up, right? The crude oil didn't really move downwards. So which means that very good chance the crude oil is going to go up again. Okay, crude oil is going to go up again. I suspect that crude oil today will likely be breaking the high. I suspect that today crude oil will break the high to cross $74. Okay, now it's $73, right? So I suspect that crude oil may go and test $74 today. Okay, crude oil to test $74. Okay, all right. And if you look at the crude oil chart on its own, okay, today crude oil chart is also between the 2 pivot point. KSI is green, so most likely crude oil is now has no more KCB, right? Seems to be at all-time high at this recent high level. All right, this is not the one. Sorry, this is the flip chart. Just a moment, huh? Okay. There we go. Never mind. Sure, there we go. All right, this is the crude oil chart for today above between the 2 pivot, but KSI is green, so likely you go for $74, and $74 is the pivot 1 level, so it's all in line. Okay, all in line. All right, cool. Okay, so we have all this, then that will come to the end of the part 1. All right, so if you want to stay, you can stay for the part 2. If not, okay, just hang on a minute. Okay, we'll start very soon, okay? All right, apology again just for the sudden 5-minute break because I need to make a very important phone call. Okay, very, very important. All right, yeah, indeed, unless it's very extremely important. If not, I will not do that. But, you know, if I have to do, it's still very, very important. Okay, all right, so I will not wait further because I need to rush. So let's continue. Now, you can see that this is what is happening right now. Why I say it doesn't even matter anymore. This is the 11 lyrics. So look at the economy hard data. Hard data is really very bad. It is really, really showing you the last few months. In fact, the last 6 months or 9 months, the data have been coming down. But the thing is, this hard data coming down, it doesn't change because stock market keep on going higher. And the rational reason is because the market, this is because of the money that's pumped into the system. Okay? So this one, you cannot deny this. All right, that's why I got really tough. All right, it doesn't even matter how hard you try. Keep that in mind. I designed this rhyme to explain in due time. Okay, so it will explain itself when time comes. You know, that is the reason why I say that traders in coming July, be very careful. Because now you look at the city inflation data versus the Bloomberg Eco Industry Sector Surprise Index. Oh my goodness, look at it. Really, really incredible. A huge divergence between both of them. Okay, now the thing is this, if this is going to continue, right, it's definitely entering a stagflation potential. But again, well, someone have to come back in to meet, right? So there is a possibility they're going to meet in between. So the thing is, unless the economy do suddenly very well and the inflationary price come down, but the problem is that the only way, the reason why the inflation is going up is because that the easy money policy is the one that making the problem. So unless the tapering comes in, then there's this inflation numbers will come down. And of course, it's only when interest rate is being hiked, then of course inflation will be cut, and then this number will come down. And then this is going to happen. Let's hope that the economy and the inflation numbers will come back to meet again. But it's going to be very tough because you need the economy to do well and you need to hike interest rate at the same time. So I really cannot see how can they come down together unless there is a sudden drop in certain thing like an asset class, which aka the stock market. If the stock market suddenly drop a lot, this will basically wipe out wealth from many people. Then maybe that will force people to go back to work. Then maybe this thing can come back again. If not, this two will get further and further away, or at least you can see that the inflation going higher and the one at the bottom trying to chase after it. So you got my point? So that's how I see this chart. And of course, you look at it, the dollar, although has sank recently from April this year until June, that's why the gold price went up. But now when the dollar started to move a little bit higher, the gold price come down quite a fair bit, right? But interestingly, recently the dollar went up, the gold also go up. So that's why I tell you this, the inflation thing has kicked in already. The feel of it finally kicked in. That means that now the inflation is really in the system and everybody can feel it. And in order to protect themselves, they rather hedge themselves in the market. So that is the reason why you will see that the dollar will be going up, inflation will stay, and the gold will also be going up at the same time. Should I check with in the Benedict, right? Remember Benedict, I shared with you that I asked you for your advice, and you say that yes, indeed, there is a possibility that dollar can go up while the gold go up at the same time. It is possible, right? Okay, so the one that's going to be crazy, look at it. Oh my goodness, the overnight reverse repo operation is now at $991 billion. Oh my goodness. We are just $1 trillion away. Why? Because all the banks are putting money in the central bank. First of all, it scores goodie points. Most important thing is brownie points. But main thing is this, all right, that's money. Because how much money you put in, I guarantee you a fixed return, right? So of course, no brainer. So the banks are dumping a lot of money back to central bank, all right? Of course, the question is why central bank want to take back so much money, right? What do they have something we don't know? That's the reason why people are actually asking the question, why do Federal Reserve want back so much money for themselves and they don't mind paying interest? But of course, this interest is all printed money. So it doesn't matter, okay? So this is a cartoon to just, sarcastically say that this is fine, doesn't matter, okay? Now, the last one is this one. I want to share with you this Goldman Sachs, okay? Again, it's on Pro, so you need to pay for this service. All right, Goldman Sachs says that what if, okay? Now, they have been correct and spot on for the equity market, but now they're saying is what if, okay? What's what if, okay? They are saying that they forecast, if let's say, if let's say the yields the 10-year yields go to 1.9%, and they're pretty sure it will go there, okay, pretty sure, that means that the price to earning ratio, if let's say there's no better earnings at 22, that means that the stock market may have to pull back by a certain figure. All right, so let's take a look right now. This is the 10-year yields, and we can see that at 1.45% have been a very strong base, and about 1.45 is a strong resistance, sorry, and 1.42 is a strong base, and of course at 1.6 is a very strong resistance. So obviously, if the market can go past 1.45%, the next number is 1.62%. And if it goes through 1.62, then it can go all the way. So this 10-year yield will be something to watch out for the next 3 months. If the next 3 months, the 10-year yields really creep above it, that means that central bank has lost their strength against the bonds, or actually they're tapering. And from there itself, we can see the yield going up. So the yield, the next 3 months is going to be very, very important. And because of that, right, if the rates really goes up to 1.9%, all right, or even 2.5%, according to Goldman Sachs says, all right, that means the S&P may have to drop down to 3,550 or 17% from its current level. Wow, that is really crazy. So I'm going to say this, I don't think you hit 2.5, but I cannot believe 1.9. So even 1.9 at the moment now in this discounted model, right, that means the S&P may have to go back down to 4,000 to 3,900 level, okay? So you can do your own mathematics, just take the numbers and do your ratio, you roughly can get the potential downside. But again, before you jump in and say that, wow, okay, market must slam down already, right? Do understand this, Biden and Democrats, right, they are supposed to have this corporate tax rate involved, right? But the problem is this, until now, right, a lot of talks have been going on, it doesn't seem to manifest, and that's the reason why technology shares are being bought up recently, because they are suspecting that this tax reform will not go through. So if the tax reform don't go through, who will benefit? Definitely technology will benefit. That's the reason why now the technology shares are being bought up, right? Because people are betting that this tax reform will not go through, because some of the Democrat camps people are already saying that they're not going to accept this. So with that itself, right, that's the reason why there's a slur of buying into technology shares recently. So that is the thing here. Of course, what if it goes through? Well, if it really goes through, then obviously, then the whole technology sector will come down very badly. But on the flip side, if it doesn't go through, then there is a high chance S&P may even go to 4,500, which is come out in line with what Tom Lee says, 4,006, and also the technology sector side. So this is really both sides of the coin. You guys have to watch the tax reform very closely and also look at the yields very closely, all right? So all these are all the things that you won't get from the mainstream media, because I went to do a homework for you, and I hope you like it, okay? Now, last slide, this is the one that you are waiting for about July month statistics, all right? Now, do note, okay? Apparently, it's somewhere earlier, I showed you, right? Only July and September for the last 60 years, they are tied at 48% of time being positive. And the average return for July is very mere, only 0.38%. And July the 2nd, which is like tomorrow, is historically the fifth worst day of the month, okay? All right, so take note of that tomorrow, okay? Then July is up for 3 years in a row. That is, but don't understand this, this is back in 2018 data, so it's not that accurate. So that is bit decent. I just ignore number 4. Number 5 is like, do note again, they're talking about the highest. The lowest it went was 7.9%, okay? All right, so take note of that. Then if you are to invest in July month, normally you still make money, but not much, okay? Now, January to June, the stock market is below typical annual seasonality. So, of course, let me try to tell you that, right? If the month of January to June is very well, usually July, there is some pullback. Okay? And, of course, by right, overall itself, right? Okay, third quarter, usually the third worst quarter for the entire year, because summer break and also profit taking, okay? So take note of that. This is what happened for July. And do note, July the 4th is Independence Day, right, for America. So maybe there'll be like a little bit of fireworks in between before that, and then maybe some profit taking. So guys, my point is this: from July the 1st today until July the 15th, I say that overall we should see some profit taking, all right? But of course, don't just hear me out and just trade accordingly. Just make sure you follow the chart, follow the colors, and make money from that. Okay, that will be all for today. Thank you once again, guys. Appreciate it. Sorry for the break earlier. I wish you all the best and trade well. This is Kel signing off. This afternoon, no afternoon MAO. Don't have, okay? Don't have things to do. I'm so sorry. Okay, guys, take care. Bye-bye.